Today my topic is income tax law and practice. Residential status. There are different categories classified. First one is resident. Next one is resident and not ordinary resident. Last one is non-resident. Okay. How to determine the residential status? Residential status of an individual, resident and non-resident. There are divided into two types, resident and non-resident. The residence is divided into two types. First one is ordinary resident, another one is not ordinary resident. Next one is how to calculate residential and ordinary resident. There are any one of the basic conditions and both of the additional conditions. There are determined any one of the basic conditions and both of the additional conditions. The first additional condition is the resident stay in India 2 years out of 10 years. Next condition is the resident stay in India 7 years out of 730 days. These days the resident stay in India, he is satisfied both of the additional conditions. That is it, resident and ordinary resident. Next one is residence. Residence satisfy any one of the basic conditions. He stay in India 182 days or more during the relevant previous year, or 365 days or more during the 4 years immediately preceding the previous year. That is the residence or individual. Next one is resident and not ordinary resident. This is the any one of the basic conditions are both does not satisfy the additional condition. That is the resident and the not ordinary resident. Next one thing, non-resident. Non-resident is satisfy the anyone not fulfill the both of the conditions. Any one of the basic condition and both of the additional condition not fulfill the not satisfy the additional conditions. That is the non-resident. Scope of total income is divided into three categories: resident and ordinary resident, non-resident, resident but not ordinary resident. That is the scope of total income. The computation of total income. The first one is income from salaries. Salaries, any sum of money, that is income from salaries. Next one is income from house property. Income from house property is any one of the house we are rented that receive the property, that is it, income from house property. Next one is profit and gains from business and profession. Business and profession means any one of the money we are received from other persons. Next one is income from capital gain. The capital gain is any other sources, whatever it is, any other sources we are received from others. Next one is other sources. Income from other sources. Income from other sources means any amount, whatever it is, house rent, income from salary or capital gain, whatever it is, that is income from other sources. Next one is income from house property. How to calculate GAV? GAV in the sense gross annual value. Gross annual value means GAV, fair rental value and municipal rental value. The comparatively whichever is highest. Fair rental and municipal rental comparatively whichever is highest, and the answer of the whichever is highest amount and comparatively standard rent whichever is lowest. That is the second point. So whichever is lowest amount and comparatively actual rent received, that is it, gross annual value. The gross annual value less municipal tax, that is called as net annual value. The gross annual value less municipal tax, that is called as net annual value. The net annual value less standard deductions and municipal tax paid, that is the income from house property. The standard deduction received from net annual value 30% of amount, that is the standard deduction, and interest on loan borrowing, interest on amount, interest on capital borrowing, that is all of it is. That is the process of net annual value. These amount are following that the net annual value. Next one thing, income from house property. These process only for following that the income from house property, gross annual value minus municipal tax paid, that is the net annual value. The net annual value and how to calculate income from house property. First one is standard deduction. These standard deductions received from the net annual value 30% of amount, and interest on loan, interest on borrowing capital. This all of deductions of amount. So net annual value minus deduction of amount is equal to income from house property. That is the how determine the income from house property. Today we are seeing the topic is resident and non-ordinary resident, non-resident, income from house property, gross annual value, net annual value. That is it. Thank you.